Hey, welcome back to The Dive. Commodities, oil, gold, silver, and uranium are some of the topics that our guest will deep dive into today. He's the principal analyst and editor of IndependentSpeculator.com and one of our regulars here at The Dive. Lobo Tiggre is joining us today. But before we bring you Lobo's interview, do me one quick favor and just go ahead and smash that subscribe button so we can keep making you these videos. Hey Lobo, welcome back to The Dive.
Happy to be back with you, Cassandra.
Okay, so let's dive right into it. JPMorgan Chase CEO Jamie Dimon says that he's preparing for an economic hurricane, and it's time to be conservative with your balance sheet. Do you think that investors should do the same at this time?
I thought investors should have done the same 2 years ago. It's sorry, because it was kind of like, when do these people get a clue? I understand the mainstream doesn't think the way contrarian outsider gold bugs do and so on. We are not them. But still, 2 years after they shut the world down like John Galt, and they think there's going to be no problem, suddenly they decide maybe there's going to be a problem, and maybe it's good to get a little careful here. So, Johnny come lately, but welcome to the club, JPMorgan. Of course, people should be careful. We are, what to say that we haven't said 10 times, Cassandra, we are in uncharted waters. It's a big mistake to rely on, supposedly tried and true charts like 60-40 and so on. So yes, of course they should. Not because not because Dimon say so, Jamie Dimon, but because it's been evidently the prudent thing to do for some time, with a war now on top of everything else.
Yeah, and we've reached 100 days since the Russia-Ukraine war started. Everyone's been seeing a spike in commodities, specifically with regard to oil and wheat. If this drags on, what do you think will happen to commodities?
I have to reel back a second and say this 100 days thing. Every day I see this 97 days, what we now know, and so on. It reminds me of Saturday Night Live when they would say 365 days and Generalissimo Franco is still dead. I mean, at some point, it seems like the headline should change. You don't remember that. Maybe you're too young. But,
no, that's crazy.
these. So the war is not going away anytime soon, evidently. But it's always been more about the sanctions. The economic war is much more important. So even if it's 100 days, 200 days, that's not what matters. What matters is the new Iron Curtain and what that's doing to commodities, including energy and food, as you mentioned. It's kind of funny. Today, of all places, it was CNN, usually, the cheerleader for a Democratic administration, was out there talking about the energy crisis and how it could be worse than the 1970s and how bad it is. It's pretty scary if even CNN is saying things like that. But they're just looking at the energy side, which clearly, the new Iron Curtain severing major arteries of energy flow in the global economy. That's a big deal. But there's also the food side that you mentioned. People don't like high inflation. People get upset about high inflation. But when you go into the food store and you can't afford to feed your family, that's what gets people really out in the streets. So I'm not trying to be gloom and doom, and pitchforks and torches are on the way. But this is the kind of stuff that, can lead in that direction. So people should not just dismiss this. They should not just say, oh, it's business as usual. The Fed has the tools. They'll take care of it. They'll kiss the boo-boo and make everything better. I'm not sure what the takeaway is there, Cassie, except, sorry, I don't know if I can call you that, but
yeah,
I do expect higher prices, not just inflation in general, but higher commodity prices to stick around. And I expect that to happen even if we see a recession. Because of the new Iron Curtain, because of the money printing, because of the broken supply chains, and we may have the great reopening joined by China soon, really turbocharging this. So yes, I'm looking at higher commodity prices ahead.
Now, the National Economic Council said that the White House is considering a windfall profits tax for oil and gas producers following a similar announcement that happened in the UK. How do you think that this impacts the investment case for the oil and gas industry?
I think the oil and gas industry has been so beat up for so long, they probably just kind of like, yeah, what else is new? Kick us while we're down, kick us while we're up. Now they're up, so they want to kick them. But you know what? I'm not a big believer in tax incentives and so on. I'm a believer in the free market. But if the government wants to put an extra tax on the oil companies now that they're making a little bit of money, where were the tax credits when oil prices went negative in 2020? If it's unfair for these, evil speculators to make all this money now that oil prices are up, why was it fair for them to lose money and take one on the chin for everybody when oil prices were down? So, the story makes no sense. It's not coherent policy. It's populist. It certainly plays well with voters who, see evil corporations and yes, stick it to the man there and lower my prices at the pump. So totally unsurprising, very predictable course of events. But the implication for us as investors is really that supply in the face of things like this will continue to be constrained. People will continue to underinvest. Why would you invest in an industry that's so hated and is being regulated out of existence? Which actually ironically means that the prices are likely to stay higher. I actually think the triple digit oil prices, far from being an anomaly, I think that's the new normal, Cassandra. I think, it'll fluctuate above and below $100, but where we fluctuated above and below $60 for some time, I think now the new normal is triple digits, $100 plus. And I think there will be opportunities for courageous investors in that space.
Okay. So let's come back to gold for a second here. Gold has moved higher around the $1,870 level. What is your read on gold's price action?
But as you and I speak, it's Friday jobs report day, and good news on Wall Street is bad news on Main Street. That topsy-turvy backwardness we've seen for some time is in full force. But just before that, gold was back up pushing towards 1900s, which is interesting to see. What useful things can I say here? Well, one is just the fact that we're still here in the face of a change of direction in real rates. I mean, they're still low. Real rates are still low, but a change of direction matters. The Fed is hiking rates, which is supposed to be bad for gold, and gold just refuses to die. And then you've got the dollar strength, which has weakened a little bit lately, but is still relatively high. The dollar is close to parity with the euro. That's supposed to be bad for gold, and it still doesn't die. It still, just keeps hanging on, coming back there. I think this says a lot about how real people in the real world see things going forward. And even though investors, most of them, drink the mainstream Kool-Aid, I think most of them are worried enough, or enough of them are worried enough about persistent high inflation that they're starting to hedge with gold. And that is huge because, gold's been this pet rock. Warren Buffett doesn't like it, doesn't pay any coupon. From the mainstream perspective, gold serves no purpose. It's a historical, traditional, barbarous relic, right? So to see it holding on in the face of headwinds, serious headwinds right now, I think is actually quite encouraging. And I do think it goes higher because I do think there are shreds of transitory still holding on. And I think that those are going to be disabused in the quarter or two ahead. And I do think that'll be good for monetary metals prices, gold and silver.
Yeah, I was just going to say gold or silver's been making its gain as we speak. So you see that it's heading higher too?
Yeah, I do see, my friends over at Wall Street Silver call me Darth Silver because I'm not a cheerleader saying, yes, it's going to the moon tomorrow. But I'm just trying to be realistic. And actually, the reality for me is very bullish for silver. It's not, a mythological thing, but it's just the reality of silver taking on this increasing industrial aspect. It is separating from gold more and more. And some people don't like that. They don't want to see that change. But I actually see it as a win-win because silver is still a monetary metal. So if you have a hyperinflationary breakdown and people pile into the monetary metals, that will not leave silver behind. So you have that way to win. And then if things calm down and there's a reflationary boom, which will be incented by the powers that be to go into all these green technologies, that's very bullish for silver too. Unless we go into a real depression that is not inflationary, that is not a stagflationary depression, but basically all the roads forward I see are very good for silver. But the reality is that it is separating more and more from gold. And You can ignore the data if you want, but that's what the markets are telling us right now.
Okay, now Germany has thrown its weight behind demands to sanction uranium imports from Russia. How do you view Germany right now in the uranium market?
Well, perhaps irrelevant. I mean, Germany itself, they've already decided to shut down all their plants. They've been so adamant about this that it's a foregone conclusion. And the fact that they recently even mentioned that they might think about reconsidering those shutdowns is actually a big deal in this whole energy space or slice of the energy sector. But Germany itself is essentially out anyway. So, what they do doesn't matter in that regard. Now, as a heavyweight in the EU, and if they can push the EU to put these sanctions on for everybody, that is a big deal. France is a major nuclear power, and there are lots of other ones, and Eastern Europe is very keen on building new nuclear plants. But of course, Germany can maybe push them to ban that. At the end of the day, though, uranium is not scarce. It doesn't have to come from Russia. It'll come at a higher price from somewhere else, but it's there. So long story short, Germany itself, not relevant. Can they push the EU in that direction? That is relevant, but it's actually very bullish for uranium prices and therefore for uranium investors. It's not a bad thing.
Have you been seeing a change in sentiment towards nuclear power over the last year at all?
I think so. I mean, like I say, that for Germany, it wasn't even on the table. There was no discussion. And it was about a month ago, they admitted that maybe there could be some discussion. They didn't think they were going to change their mind, of course, but that they were even willing to go that far is a big deal. And you have Poland and other places that are looking to build up their nuclear power. You have even Ukraine today, as we speak. There's news out that Ukraine is increasing its order for new nuclear power plants or new reactors, and they're of course switching from Russian supply to U.S. supply. Now, obviously, the war needs to stop before that news even matters, but it's a sign of the times. It's how the winds are blowing, and I do think the odds are that despite Germany's opposition, that nuclear will become part of the EU's new green taxonomy at some point when that's finally finalized, and that's bullish too because it unleashes. Unfortunately, it has. This is the way it is, but it unleashes government investment into the space, which can help push things along. But actually, the big news here, sorry, you didn't ask about this, but I got to put this in. The big news really for uranium bugs is completely on the other side of the world, which is the new government in Japan really doubling down on restarting their nuclear reactors. Because, Ukraine building new plants someday, or Germany possibly considering an about face, these are things that realistically affect the supply and demand years down the road. Japan restarting now has the ability to affect the price of uranium this year. So that's really quite bullish. And by the way, everything's on sale with the market. I do see this as an opportunity. The one caveat being nothing to do with uranium really, but just the potential for the Fed to really spook things and cause a market crash. So there are things that I like, not just uranium. There's gold, there's silver, there's things that I like, but right now I'm not buying anything until I'm clear that the markets aren't going to crash with the tightening the Fed has already got on tap, or that they do crash and I get stupid cheap prices.
Okay, great. Well, thank you so much for coming on today, Lobo. Before we let you go, would you like to let our audience know where they can go to get more of your commentary?
Sure, it's independentspeculator.com. And for the two people that haven't tuned out yet, I encourage you to sign up for their free weekly newsletter. We don't spam the heck out of you with daily advertisements. You get one email and I tell you what I think, and I do my very best to provide guidance for everybody who cares for it. Thank you.
Awesome. Thanks, Lobo. Thanks so much for watching today. We'll be back again tomorrow with the latest news and updates. So be sure to stay tuned by hitting that notification bell and subscribing below before you leave us. Bye.